Thanks for joining us at XM.com. This is the Weekly Outlook. I'm Christina Marujos, and with me today is lead investment analyst Rafi Boyadjian to have a look at the upcoming week. And this week, Rafi, is all about the data. Let's start by having a look at the United States. We'll be getting the all-important inflation print for January on Thursday, and investors are already bracing themselves for a strong number. However, are we close to peak inflation, and how could the dollar move?
Well, that is the all-important question, Christina, of course, isn't it? When will inflation peak in the US? Because how fast, how aggressive the Fed gets in terms of hiking rates, it all comes down to when we're going to start to see inflationary pressures to ease down a bit. That's probably not going to happen in the January CPI numbers. We are expecting the headline rate to go up from 7 to 7.2%. So that would be another 4-decade high. We might, though, see a bit of a slowdown in the month-on-month rate from 0.5 to 0.4%. However, the core CPI figure, that's expected to jump the annual rate from 5.5 to 5.9%. So it looks like we still have a little bit some way to go still in terms of getting convincing signs that this surge in inflation is coming to an end. However, analysts are also going to be looking at the breakdown of the inflation index, the components that make up the CPI, Consumer Price Index, and specific components that have been the worst hit from the pandemic and the supply disruptions. So we might see some signs perhaps that certain sectors we are seeing price pressures to ease back a little bit. And if that were to be the case, we could potentially see a big boost for US stocks on Wall Street because treasury yields would probably climb down a bit from the recent highs if that were to happen. On the other hand, if we were to get another upside surprise in the CPI numbers, that would be negative for Wall Street, but positive for the dollar. Now, the dollar, of course, took quite a bit of a tumble over the past week, apart from the fact that we've had risk appetite, which has been weighing on the dollar. We're also seeing a boost for other currencies, such as the euro on the back of the ECB meeting. So the strong CPI numbers next week could definitely help the dollar to halt this decline and potentially even reverse back up again.
Let's cross into the United Kingdom now, where the pound whipsawed after the Bank of England's policy meeting, and the rally looks in doubt despite the expected rate hike. Can GDP numbers out on Friday provide a boost for sterling?
So we did indeed see a few wild swings for sterling after that Bank of England meeting. So initially the pound jumped after some MPC members voted for a half a point rate hike rather than the 0.25% rate hike that we got. But this was completely unexpected because we hadn't had any signals from the bank that some members were considering a more aggressive rate increase. And just like the US, it's all about inflation in the UK. And although the bank did revise up its inflation forecast, Governor Bailey in his press conference kind of painted a very uncertain picture, both on the inflation front and for the UK economy. He did actually warn that inflation, although the forecast went up, he actually warned that inflation could fall well short of those forecasts if the energy crisis were to recede. So that's why the sterling is struggling a little bit. Next week's data, I think a lot will depend on not so much about the quarterly print for the fourth quarter of 2021, but more so on the December. We're going to get separate numbers for December as well, because that's when the Omicron wave started to have quite a bit of an impact on the UK economy and, of course, in other regions as well. So if the December numbers are rather worrying, then sterling will probably continue to struggle. On the other hand, if we see that the Omicron didn't have such a huge effect on growth after all, then we could potentially see sterling resume its rally.
And finally, Rafi, before I let you go, New Zealand's quarterly survey on inflation expectations is out on Friday as well. What could that mean for RBNZ policymakers and, of course, the Kiwi?
Well, this will, of course, be crucial for that RBNZ meeting coming up on February 23. And this is, of course, the RBNZ's own survey on inflation expectations. And previously, we've seen that they do affect monetary policy. So the timing is of course, very crucial here. We've seen over the past year inflation expectations surge in New Zealand, and we get another surge for the latest 3-month period. Then we might see investors starting to price in a 50 basis points rate hike at the February meeting. On the other hand, the New Zealand dollar hasn't been doing too great lately. It has been rebounding against the US dollar, but it's been rather weak rebound compared to other currencies, such as the pound, the loonie, and even the euro now. So if we were to see strong prints in the 1-year and 2-year inflation expectations that we're going to get from that survey, we could potentially see the New Zealand dollar gaining a bit more positive traction than it had been recently.
Rafi, it was great having you with me today. This was the Weekly Outlook here at XM.com.